All right, currency traders, welcome to Forex.Today. It's our strategy session. Take an opportunity to realign our satellites and collaborate as a community. Let's get going, huh? Yeah, at least a dozen trading ideas posted to the website every day. Coolio. Here's yesterday's video. Welcome to review it. A lot of technical analysis in this one. One of the things we should probably review out of that video from yesterday was there was a potential double top on USD CAD. And I said, look, if that's what you wanted to look for, you could set it up, but you got to wait for a conservative entry. If that's what you wanted to do, if you wanted to buy dollar, buy Canadian dollar and sell US dollar, that may not be something I'd want to do. If you wanted to do it, you could do it if you were going to be conservative. And of course, if you were conservative, you never got it. So we might want to revisit that idea as well. But hey, trading currencies and commodities and, well, trading everything is risky and not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN. Now that means your trades are entered directly into the interbanking system. TradersWay is not taking the opposite side. They're not making the market for you. They offer access to the foreign exchange market, but also to energies, metals, indices, and binary options, give you the complete full package. These sessions are start 7:30 in the morning, which is approximately London lunch, and a couple of hours before Wall Street opens. We meet here every Monday through Thursday, and then every Friday we're at fxstreet.com. If you go to the website, please click register. If you do, you get access to community social features like live chat so that you work with other traders like yourself throughout the European or Asian sessions. You can also leave comments on the, oh wow, look at that. What did I just do? Hang on, woo, there you go. And you could also leave comments on the 12 trading ideas or so, maybe there's more than that, that the analyst team leaves every single day. Somebody said, what, they're not robots? No, they're not robots. They're real people in the room with us right now. So they take the time to leave their trading ideas. Maybe you could take the time to offer some feedback. All right, chat room is full. All right, wow. All right. So let's get going. Let's do some technical analysis. What would you like me to cover today? Aussie dollar, okay. Did you trade the Asian session? Yeah. Yeah, it was a nice one. CPI came out pretty disappointing out of Australia. Let's load that up. And some are guessing now that the Reserve Bank of Australia could lower interest rates further. Yet, here we are just into the buy zone that we created, what, 2 weeks ago? So this is where you can get caught in the noise if all you did was look at 15-minute charts. And you're like, oh, the sky's falling in Australia, the sky's falling. Well, the sky has already fallen in Australia and they're still alive. So anyways, yeah, CPI was very disappointing. But the only thing that's happened is we fell into the primary buy zone. if you want to be a bull in Aussie dollar. Now the thought process is you probably don't want to be short US dollar, do you? There should be, I guess if you wanted to buy Aussie, you would pick something else, wouldn't you? Artem says, how about Aussie yen? Okay, let's take a look at Aussie yen. And what do you notice about Aussie yen? Yen is stronger, yep. Buy zone. Why is it a buy zone? Yeah, it was weekly M3 to weekly M1, huh? Perfect trade, yeah. Good call on that. 50% retracement going back where here? Yeah. I guess. Are you looking at here to here? Yeah, all right, fine, okay. Yeah, cool. Do you notice I'm long? Cheeky trader, huh? Cheeky little trader. What a cheeky monkey Mr. McDonell is, huh? Do I see a buy signal? No, I don't. But I am at support. So, I don't know. Stupid trade. Stupid is, stupid does. But there is support. Doesn't mean it's great support, right? Now, what if all I was doing was the 5/8 and the 200? Well, at least the 5/8 on the 1 hour is long, right? There's something at least. Ordinary love. Daily looks bearish, sure. Let's take a look. Well, let's. Yeah, it's one of these things like the daily might look bearish to you, but you wouldn't be selling it now, right? It's just, yeah, it's just one of these things like the sell zone is here. It should be pretty clear. So you could have been short, I mean, 2.5 weeks ago, right? Kind of thing. What you could do if you're a bear is wait for the dead cat bounce. Okay. And head like this. Now, what's the little trick with pivot points that sometimes works? What's the little trick if you hit your weekly pivot profit zone on a Tuesday? So let's go back to this other chart. Because that's the target for the week, right? M3 to M1. And we hit that Tuesday. No, I'm not looking for reverse. I don't want to, I'm picky on the terminology, right? Return back to M, we're at M1. No, not return back to M3. Anybody else? Weekly central pivot point, yeah. Somewhere between now and Friday, there's a reasonable chance we actually touch that central pivot point. Now, do we touch it and drop or touch it and continue rising? I don't know. I haven't seen consistent observations, but my, unscientific observations is very often what I've noticed is we seem to go back and we seem to touch fairly consistently the weekly central. And that's if you do your full range but early in the week. And I can't even see an example of it on these charts. No. No. So, maybe. A lot of hope and prayer on that one, right? But what about this? What about the Aussie dollar lost a lot of value because some market participants believe the RBA must cut interest rates now. Next week, right? Isn't that the next meeting for the RBA? It's next week, isn't it? Has anybody got an RBA calendar in front of them? Everyone's Googling. November 3rd. Thank you, Bobby. November 3rd. So that's coming up. That's Tuesday, right? All right. So what if they don't raise interest rates? Or sorry. Oh boy. Talk about a Freudian slip, right? What if they don't cut interest rates further? Then somebody's on the wrong side of this trade here that is bearish because they're pricing in a cut. So at least on the short term, up, right? And then what? Long term, probably down. So can we talk a little longer term trade stuff? Can we talk a little macro? Okay. Well, Sebastian brings up another great point, which we've talked about before, but it's a good time to add it again. What if the Bank of Japan adds to quantitative easing on Friday? How does my Aussie yen do? It goes up. And then what if the RBA doesn't cut interest rates further? What happens to my Aussie yen? Well, oh snap. Then that might be a ripper awesome trade, eh? Okay. Now does it seem like there's method to the madness? Yeah. Now the question is, were you thinking that 12 hours ago when the news came out? So there's a bit of hope and prayer on that one, but whatever. You got to grip it and rip it, right? So anyways, we'll see. All right, so let's talk a little global macro here. We don't have to do it the whole session, but the Fed is not expected to raise interest rates today at the FOMC meeting. And if you recall a year ago, was anyone trading with me a year ago? Yeah, YJ for faux show. Tim bits, Timmy bits. Yeah, I said a year ago that there was no way the Fed should raise interest rates in 2015, and maybe not even 2016. My tone did change a couple of months ago because the Fed said they would raise interest rates multiple times. I'm like, all right, fine. But I'm only changing my tone because they actually said it. But now we're starting to price in the fact that they were probably wrong when they said it. They probably stuck their foot in their mouth. Okay, so why would the Fed raise interest rates? And I don't mean it like sort of debatable like what we have it now, but why does a central bank raise interest rates? I mean, what's the point? What's the purpose? There must, right? A porpoise with a purpose. Yeah, to control inflation, correct. Okay. Do we have inflation? No. A couple of things that happens. One, we're in a situation similar to the ECB a year ago, that we have deflation, essentially, lack of inflation. How about that, to be more precise? We lack uncontrolled, unbridled inflation, partially because we have a strong dollar. We haven't even raised interest rates yet, but the dollar is 20% stronger than a year ago. Oh no, minimal employment. We have minimal unemployment, I see what you're saying. Yeah, when we're near full employment. All right, so the dollar is strong, so why would prices go up if a dollar buys a lot of stuff? There's no need to raise prices. And then, of course, it's relative. If China cuts its RRR and its interest rate, what happens to the value of Chinese products for an American? It's cheaper. If Bank of Japan is doing quantitative easing and possibly increasing the rate of quantitative easing, what does that do for Japanese products to an American? Yeah. Even Sweden increased quantitative easing today. So Swedish products for an American, do they become more expensive or less expensive? Canada cutting interest rates, Australia cutting interest rates, New Zealand cutting interest rates. Holy smokes, eh? Cheap IKEA. What an interesting world we live in, huh? Maybe ECB increasing quantitative easing? All of this makes the dollar stronger, relatively speaking. But if you want to look at it a different way, America imports a lot, don't they? And those imports cost less. And that reduces inflation. So why should the Fed raise interest rates and strengthen the dollar more? Because what the interesting part of this is, some might say, the stronger dollar will kill exports. Well, I would say fine, but our economy is 70% consumer spending, isn't it? This is what China would like to have, but since they're cutting interest rates in RRR, they simply don't have the guts to do it, because what they're doing by devaluing their currency is they're making their own currency weak, which means Chinese people can't afford foreign products, and they have less purchasing power at home and whatever. So clearly, China is not building a consumer economy. What they were doing was trying to add stimulus to the economy by adding more factories. But China doesn't need more factories. So now here we are, and now they're cutting their reserve requirement ratio, adding to the money supply, devaluing their currency, and therefore not making a consumer economy. So it'd be interesting now if Americans had a stronger dollar. This is pretty good because now we can go shopping and buy a whole bunch of stuff for cheap. How about that 4,000K TV? That 4K TV at the box store is just getting cheaper and cheaper and cheaper. There's no reason to save money because interest rates are zero. I'm not earning any money in the bank. So if I buy a 4K TV and stick it on my wall, well, that 4K TV is paying me the same interest rate as my savings or as my checking account, right? So I have to choose, if my savings account doesn't pay me any money, I could hold it in cash. Cash doesn't pay me any money either, but I could convert my cash into a giant TV that I can hang on my wall, and it will also not pay me an interest rate. So I might as well get the TV. And then that could possibly be good for our economy. So maybe we don't need to worry about exports. But balance of trade, that'll be interesting. And maybe we'll start running a trade deficit that grows bigger and bigger. And I think maybe on the long run, that would be a good thing. But it seems to me if the Fed raises this year, and this is what I was saying a year ago, they'd be virtually the only economy tightening. And do we really need to tighten when everyone else is loosening? Because by everyone else loosening their monetary policy, it is making ours tighter. It is creating deflation. Are BMWs and Mercedes and Volkswagens and Lamborghinis and Ferraris, are they getting more expensive or are they getting cheaper? How about a Lexus and an Acura, an Infiniti? They're getting cheaper and cheaper every day. So where's the inflation? So the dollar is gaining strength. If you're looking at a dollar index chart, the dollar is gaining strength and the Fed's not doing anything. And that in of itself is creating deflation, or not really deflation, but you know what I mean? Like it's not creating inflation. And if there's no inflation, there's no real reason to raise interest rates, right? And then if the Fed did raise interest rates in December, like they said they would, but nobody believes it anymore, and we can look at that in a second. But if they did, wouldn't the dollar get even stronger? I mean, significantly stronger. And wouldn't that create more deflation? Wouldn't that kill exports even more? Wouldn't that increase imports even more? And, does the Fed want that? Does the Fed, and the Fed may tell you they don't care about the value of the US dollar. And, maybe they don't even get it. But do you guys know who Jim Rogers is? The billionaire commodity trader that made billions of dollars with the quantum fund with George Soros, doing things like commodities trading, but also foreign exchange trading back when no one else was even doing it or even heard of it, basically. He made billions of dollars. Because of that, he had access to White House dinners, meeting, leaders of the finance committee for the White House and Congress, and the head of the, leaders of the Treasury Department over the years, and several presidents, and every single Fed chair for the last 30 years, because he's a billionaire, right? And he gets invited to these things because he has money. And he would tell you that on almost every occasion he's dumbfounded at the level of ignorance that these leaders of finance have at the government level. And then he said one time he was listening to Ben Bernanke speak, and someone asked him a question about the US dollar, and he said he dropped everything that he was doing and he stared at the screen on his TV, and he was in China or something, And Ben Bernanke said that, this has nothing to do with the dollar, and then, printing more money is not going to affect the dollar at all, and all these different things. And Jim Rogers says he was staring at the TV to try to figure out if Ben Bernanke was either lying or just didn't know. And he gives all these different examples of all these powerful people in the government, and it's his opinion that, generally speaking, they don't get it. They just, like, the guys in charge creating the laws and making the policies just really don't get it. So it's kind of interesting. Does the Fed worry that if they raise interest rates, the dollar's going to get unbelievably strong, even though it's 20% stronger this year than last year? Are they worried that it gets strong by another 20% this year? Would that be a problem? And maybe it is a concern to the Fed, but maybe they just don't care. Ed's FX says Jim Rogers is protect. Why? Because he has access to these things? No, he's just rich. Welcome to America. Contribute to contribute to an election. You'll get invited. Hey, the Clintons used to rent out the Lincoln Room at the White House. You donate a couple of $1 million, boom, you get to spend the night in the Lincoln Room. So anyways, so the dollar is strong, right? Let's look at, obviously, let's look at Euro USD. Look at this, talking about monetary base. Look at this, our sophisticated conversations. All right, let's go to a daily chart or even a weekly chart. There we go. Okay, that's what happened in the last 12 months. You made a fortune selling the Euro USD. The first wave of this was the US tapering out and eventually stopping quantitative easing. So quantitative easing weakens the currency. That's what it's supposed to do. When we're in the middle of currency wars, right? Well, that's what you do. This is what the ECB just started, okay? But the process started with the Fed stopping quantitative easing, which means stopping the weakening cycle. And then we're still neutral. But neutral is less bearish than printing money. So at some point, it's priced in here that the Fed will raise interest rates. Okay? Part of this process of the Euro USD coming down is the ECB asking for and getting the legal right to do quantitative easing. And then it all comes together, right? Perfect storm. Well, the next part of this process is the Fed raising interest rates, but you notice how the Fed hasn't actually raised interest rates? We've been talking about it since, January. Look what happened this year. According to this weekly chart, almost nothing happened this year. Is anyone feeling frustrated with their trading this year? Tim Bitts is, oh boy. Maybe this is partially why. Should you have had a huge winning year this year? No. If I was reviewing your trading performance, should I see you having a banner year this year trading Euro USD? Probably not, actually, right? So we're waiting, and I want you to understand this. We're waiting for the next cycle, if there is a next cycle. And that'll be for the Fed to raise interest rates, but that might not be today. It was supposed to be December 20th is the next Fed meeting, I think. So it's supposed to be then, only because the Fed said they would do it this year. But, and that is a big but, and no, I don't like big buts, but there's probably no reason to do it. Felipe. So interesting, right? So let's take a look at something. Fed funds future. What is it? Fedwatch.com. Fed fund future. Let's just do that. Always forget what it is. Fedwatch 30-day CME group. Fedwatch tool CME group. There it is. Okay. Now, does anyone live in Australia? Where's my Aussies? Aussie, Aussie, Aussie! I could see every Australian scrambling to their keyboard. I have to type in oi, oi, oi! I would like someone from Australia. Ryan the Crazy lives in Spain, huh? Yeah. I would like someone to find the website that does the same thing for Australian interest rates. Okay. So at one point, I think the December meeting had, what, a 60 or 70? 60 or 70% chance of raising interest rates in December, right? Check this out. 34%. Probability of a rate hike in December. Is that funny? Isn't that interesting? It's dropped by about 50% recently. And maybe they're like me, like they don't think there's a real reason for the Fed to raise interest rates, but it's 34% because the Fed said they would do it, but at this point, nobody believes them anymore. Wasn't the Fed trying to be transparent? 44% for the January meeting, 57, almost 60% for March, 60% for April, almost May, June 70%. So it kind of feels like June. Thank you, Sean. Target rate tracker. Shall I throw a pip on the bobby for you? Ripper. Yeah, nice, huh? Okay. So you can go through and do your own pondering, okay? Another opportunity to think like a professional trader, guys. All right. So back to this. It's 6 months out. Now, how do we come up with the probability? Well, remember, these are government treasuries, very short term, with no perceived default risk. And if I owned a bond that paid 1% now, and I wanted to sell it to you, like I just want to get rid of it, and you thought bonds in 6 months were going to pay 1.5%, would you buy my bond? Like, dude, why would I buy your bond, man? I can get 50% more if I just wait. But okay. So you understand that part? That a bond will pay an interest rate, and if my bond right now pays 1%, and I wanted to sell it, but everybody thought if they just waited a little bit, they could pick up the same bond with the same risk that'll pay a higher interest rate than the one I'm trying to sell now. So how am I going to convince you to just buy mine now? Why wait 6 months, right? Or like, just buy mine now. How am I going to convince you to buy mine now when you're like, you know what, I'll just wait 6 months and pick one up with a higher interest rate? I'll have to discount it. So the way that this is working is these are professional money market traders. This is a big, deep, liquid pool of professional traders, right? This is legit as you can get. This is not an opinion. These are the difference in prices, okay, relative to their opinions of what interest rates will be. And prices change constantly, right? And so you can look at the difference in pricing of these almost exactly the same assets, really. So imagine going to a used car lot that only sold Toyota Corollas. 2012 Toyota Corollas. That's all there is. The colors might be slightly different, but that's all there is. Some have more miles than others, which is a perceived risk, isn't it? So that's where the price is going to be slightly different. And so the market is going to set that price, right? As almost like an auction. A car with 50,000 miles is going to sell for more money than a car with 100,000 miles on it. So this is what's going on here. You can look at this, and just even by price, you could say, well, this one must have more miles. right? Because it's selling cheaper. And this June one, woo, extremely low miles, right? So anyways, the market just no longer believes. So look, 5% chance the Fed raises interest rates today. How do we know that? That's been priced in by professional money managers. There's a 95% chance nothing happens today because the futures price is 99.8750. Okay? What does that mean? If you lend the United States of America $99.87.5 today, they will pay you back 100. You loan them 99.875 cents, they'll pay you back 100. That's how it works. Is there an interest rate? There's no interest rate. You see, there's no interest rate. You're just going to pay less. So let's look at the June. $99.63.5 versus $99.87. Okay, $99.87, or in June, $99.63.5, significantly less. You can lend the United States government $99.63, and they'll pay you back 100. Cool, huh? And that's how that works. And there's no interest rate payment. There's no coupon payment. It's not a coupon bond like a corporate bond. So we're looking at what the market thinks, and the market thinks there's no reason for the Fed to raise interest rates. They don't think the Fed will raise interest rates. Okay? And I think you might find that, when you're looking at this as a market, like, where did that page go? Think of this as a market now. How many PhDs at hedge funds and at large institutional investors and like insurance companies and how about multinational corporations that have finance departments because they do so much foreign exchange trading and they buy so many bonds, like you're Apple and you have $1 trillion in cash? Do you honestly think they're sitting on the cash, or do you think they own bonds? When you hear that, oh, Apple has $1 trillion in cash, Google has $1 trillion in cash. No, they don't. They have $1 trillion in bonds. So there's a lot of smart minds figuring this stuff out in real time, and they're actually figuring it out in an auction fashion. Now, how about another quick and easy way for you to understand what's going on? How about the interest rate on a 10-year government bond? About 2%. And it's not going anywhere. It's been 2% a long time, right? You know what's crazy? 2 years ago, it was 3%. Interest rates in the United States have fallen, right, from 3% to 2%. That's a significant decline, isn't it? The lowest it's ever been is 1.5%. The highest it's been in years is 3%. It's very, very, very low. So you can, maybe that's an easier, more accessible thing. If the Fed were to raise interest rates, what would happen to the 10-year T-note? Interest rates should rise in the 10-year T-note as well. Excuse me. So going back to this, well, how about here? If Forex is the most liquid market in the world, the second most liquid market in the world is the bond market. And this year, we've had really a low side of the range is 1.8%. The high is 2.3%. And not a lot's happened in the bond market. Isn't that interesting? So it should be one of these conservative years. Yes, you should make money, but probably not a ton of money. Should you have made money last year? Yeah, probably a ton of money. It comes and it goes. Are you selling off the top? Did you sell in here? We talked about it and 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 talked about it. Okay. Jerry says, why is that? And I think, that the market wouldn't have, why didn't the market do much? And we're still waiting for the Fed to raise interest rates. That's what's happened this whole year. If you remember, there was a lot of people in January and February and March and April and May and June, July and August, and even up until September, that thought the Fed was going to raise interest rates. And now they're like, maybe they're not going to raise interest rates. So we're waiting for the policy. Okay. The policy change here was going neutral, going from a monetary expansion policy to a neutral policy, and then at the same time the ECB going from neutral to expansionary, which is an easing process. So we have this divergence of central banking policies. Now the next step is more quantitative easing out of Europe, which we'll see creates a red weekly candle. And at some point, if the Fed raises interest rates, then this will create more red candles, and this will come down. Okay, so it's a matter of when, so to speak. But maybe this process has just started. And by the way, I wouldn't be shocked if you looked at all these dates where we had peaked. It's probably the week before a Fed meeting. Okay. All right, so let's move on to another pair. Start with the USD yen. Nothing. I still haven't cleaned up my chart, huh? All right, well, let's do it this way. Isn't it amazing? Still hanging around the 120 area. Boom, 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 boom. Right, but the same right in the 55 to me is almost neutral. It's not a strong directional, indicator. There's no strong trend if the 55 is in control. So someone asks, why is the pound weak? Well, depending against what. If you wanted to buy the pound, maybe you buy the pound versus the Aussie. Every breaking wave. Yeah, if you want to buy pound, you just got to wait. That's all. It's a waiting game. Right? So if you're a bull, you need support. We have a little double bottom at 84, right? 184.000. Okay, fine. Might want to look for other reasons. You can see down here, we have weekly M1, daily S1. Little cluster down in here. Is there any price action type support? Well, let's just play with that level and see what happens. I've seen more interesting levels, huh? Seems like the next level down is more interesting. Bottom, 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 top, top, bottom. 84, so that means down more like 83. So you simply wait. Now, what if it does reverse here at 84 for whatever reason? Okay, let me draw this so that we're all on the same page. Okay. If I was a bull, I'd want to see that. And the buy zone is here, not, okay, and not before. So this would be called a trade plan, and you sit and you wait. Okay. Okay. And if you get that, that's what you trade. If you don't get that, you don't place the trade. And you say, well, wait, no, I'm not going to get that trade today. Yeah, you have to wait. But I have to trade today. Wait, I have to get a trade. Oh, well, then you should have planned it out yesterday. One thing I like to say is that if you're not waiting for something, you're not trading properly. So what are you waiting for? Okay. Look at this. Interesting, huh? It's playing off the top. Wonder what will happen. You can see this Aussie yen, since we've talked about it already. Looking at our trade plan from earlier, the next buy zone is pretty far down, but it's still there, eh? Too bad my stop is there. It's just a randomly generated stop. Okay. If it wasn't a cluster of weekly pivots, I wouldn't have bought this. I wouldn't have bought it. Okay. So sometimes you just trade what you were given, but you can see the next real buy zone is way down in here. And we've already, that's the wonderful thing too, right? We identified that buy zone 2 weeks ago. We're waiting. We know what we want to do if we get that opportunity. How about the pound yen? Somebody says, why is the pound weak today? And I say, well, look at the chart. That's why. Right? There. That's why. Is it fundamental? Maybe. But technically, that's what you're supposed to do, is sell it, and the market has sold it. That's why it's bearish. It's bearish because people are selling it. Okay. Do you see the divergence and stuff going on? Very interesting. We're at a nice little zone. And what if you didn't want to buy the Japanese yen? I think that's plausible, right? Now, this goes back to the Aussie question. We looked at an Aussie dollar setup long. And I say, okay, well, that's a technical long, that the plan makes technical sense. But what if I don't want to short the US dollar? Because I spoke for about a half an hour about there isn't many reasons why I should short the US dollar. So then I go over and we look at the Aussie yen. Fine. Well, now here's a beautiful pound yen bearish trade. It technically makes sense. It's even bearish. We even got a 5A cross down. Fine. But what if I don't want to buy the Japanese yen? But I love the look of the pound yen short. What do I do? How can I correlate this over into perhaps a better relative strength trade. Well, what did I discuss for a half an hour today? What currency did I discuss would probably be bullish, or at least not bearish, at the very least, right? Pound dollar. I would like to buy dollar, right? So now I could say, well, look at that pound yen trade. Isn't that something? What a beautiful setup. Let's go and check out pound dollar. The funny thing is, we've been short this for a month, the whole month of October. And again, somebody asks me, why is the pound weak today, Wayne? Well, why wouldn't it be? Is the follow-up question, right? It's weak because we planned it out that way. Okay, so let's say I go out let's add an amazing amount of time to this. Look at the trade plan that we have going on the weekly chart. That's bearish, correct? Right? Bearish. Bearish on a weekly chart. Let's go to a daily chart now. Okay. I have a giant triangle here because I'm pointing down. Okay, fine. Lower low, lower high, lower low, lower high, with a giant oscillator cycle off of the 382 Fibonacci retracement of the weekly setup. So what is the best guess here for what happens next? Perhaps a lower low. Now what I have is now basically a 4-hour cycle of, you know, lower low, lower high, lower low, lower high, lower low, lower high. I think at some point perhaps it's possible that we get a shorter term higher high, higher low, higher high, which then creates the new lower low, lower high, lower low. But we just still haven't gotten it yet. If you see this purple zone or gray zone, whatever that color is, why is the pound weak today, Wayne? Because you were supposed to sell it off of this resistance zone, off of the 21. That's why. Right? It's weak because you're supposed to be selling it. Because that's what the charts say. So what you do is you do this now. Okay. So what are we going to do today? Are you going to buy dollar or sell dollar? Well, we have a risk event today. We're not expecting the Fed to raise interest rates, and I'm not even expecting them to say much different in any of their statement. So, I don't know, some dollar weakness, only because what? They're not going to say anything that will strengthen it. But you have to ask yourself, what does it all mean on the long run? What does it mean on your weekly chart? And then start looking for support and resistance and all that kind of stuff. Start on your weekly or even your daily. Start on your daily and work your way down to a trade. So look at this on the daily chart. At the beginning of the month, I thought there could be possible euro dollar strength where we break out low, retrace, hit this as an area of resistance and fall. Valid plan never happened. Instead, what we did is we went to resistance, and then what? We fell. And where did we fall to? Support. And here we are in this old support zone that I drew a month ago, and on the exact day we have an interest rate decision by the Fed, we're exactly dead center of my support. How interesting, huh? Oh, so what if for 2 weeks we had dollar weakness? Cool. We'll get ready to sell. And then what if we have a good non-farm payrolls? I have an opinion, but don't take my opinion for it, okay? So please write this down. And maybe someone remind me as well, okay? Is anyone going to come to my non-farm payrolls webinar? My 3-hour webinar that I've done for, what, 111 months or something? Would somebody please remind me? If non-farm payrolls comes out a good number, check the Fed funds futures market and see how that changes the probability of a Fed hike in December. Does that sound smart? And if the probability increases dramatically in the Fed funds futures market, the US dollar is going to get ripper strong. And here we are on October 28th talking about something that's going to happen the first Friday of November, which will impact what happens on the 20th December, which will impact what we do all of next year. And we can talk about it today. Yes, that webinar happens at fxstreet.com. That's been something that I've been doing close to 10 years now. Every month for 10 years. So guys, I appreciate you being on my team. I really do. You're good people. Thank you for supporting each other. If you would, could you register so you can participate in the community chat, but also leave feedback for our analysts on even little simple things. Do you agree? Do you disagree with their analysis? Look at this, Igor doing some oil trades. What do you think? Do you like it? Do you agree? Do you disagree? Leave some feedback, eh? If you're registered, all you have to do is click and leave a comment. Pay it back, even if it's just you thinking about it. I mean, look at this Igor did a really good job here. Look at it, think about it. What do you think? What's your opinion? Even if you're not leaving it for Igor, leave it for yourself. What do you think and why? It's almost like a daily test to keep you sharp and keep you focused and keep your mind going so you don't just chase price around on your charts. Think about it. And write your thoughts. Use it as an opportunity to grow as a trader, but also have a positive impact on the trading community, huh? Would you do that for me? Yes. No, my pleasure. Yeah, and it does. It helps Forex.Today. On the long run, it'll be good for search engine optimization and rankings and all these things. But that's nice. That's nice, of course, right? But ask yourself, are you going to just magically become a better trader because you sit down in front of your charts and make a bunch of trades? Or are you going to improve as a trader because you're changing your trading behavior? Well, what are you doing to change your behavior? Well, how about taking the time to analyze someone else's thoughts and then documenting your own thoughts as well, as almost like a journal for the future, right? If Igor thinks oil's going to bottom out and you don't, well, document that, even just for yourself, just to change your behavior in something that will probably be a positive change. Think about it, ponder it, document it, and see where it goes. It's probably better than staring at the charts for 3 hours and then making a dumb trade. Why not go through at least half? There's at least a dozen trades here every day, right? Go through at least a half of them. Go through 6 a day. And think about it. What do you agree with? What are you unsure about? What do you like? What do you don't like? What do you disagree with and why? And document it as almost a personal journal. Okay? And see if it can make an improvement. I don't think it's going to hurt. Thank you, Joseph. So 114th month now I've been doing that. 114 months. Cool. That's a lot of non-farm payrolls. So anyways, got to jump, babe. Peace on earth. May the pips be with you. May your profits be above average. Cheers.